Let's bring in our market panel. Vital Knowledge founder Adam Crisafulli and Main Street Research CIO James Demmert. Adam, I'm going to you first. I mean, we're just swinging back and forth here in this very tight range. It does look like we're getting a new record high for the Dow, though. So what does that tell us about this rotation we have seen in the market as the market becomes more and more confident that September is already in the books for rate cuts and a real pivot is actually afoot here for the Fed?
I think you've had three buckets of really favorable news flow for the last several weeks that kind of helped propel us back to where we are now. You had Goldilocks data, meaning that you've seen resilient growth plus signs of ongoing disinflation. So, disinflationary growth, which is kind of the ideal scenario for equities. We've had pretty strong July end earnings. So the initial tech and retailers, so Walmart, Target, Cisco, Palo Alto Networks, all were very strong. And then we had, dovish Fed communications, the most significant of which was Powell's speech on Friday at Jackson Hole, where he was very explicit about them cutting in September. So those three buckets have helped drive us where we are now. And there really doesn't seem to be any change in either of those forces. So the bias remains higher. Stocks are expensive, and that's definitely going to be a risk factor. But, the fundamental macro forces for the time being are favorable. And we're, like you said before, we're now in the tail end of the July end earnings season, where we have some huge tech names, including Nvidia tomorrow and Dell on Thursday. That'll be very important to watch.
James, especially when we do talk about this AI trade and Nvidia tomorrow, how much does the next move in either direction for the market hinge on that?
I think a lot, Morgan, and good to see you. There's no question Nvidia and all the Mag 7 are a big part of the S&P 500. So the way they go, the way the index goes, as you probably know, we're bullish on the Nvidia trade for lots of reasons. There's a lot of skepticism, more than normal, around this print tomorrow. The stock hasn't done anything since June, which we think during that same period of time, there's been a lot of spending, a spending spree by Microsoft, Meta, and so on in this arms race to get more AI. So we think the numbers are going to beat or meet. So that means the stock market does well. And as far as the Fed pivot, that's sort of the last booster, we would say, of this bull market, the beginning of this bull market. It needs the Fed to turn. Now they have. We suggested they go 25, slow and steady. And the fourth quarter is going to be, I think, very, very productive for investors.
Adam, we've seen some interesting movement in treasuries, specifically the 2-10 spread. That is moving closer and closer here. It's flirting with de-inversion. De-inversion. Inverting? Yeah. And I just want to get your thoughts on that and what it's telling us about the bond market and what that means ultimately for the equity market if you actually start to see some sort of normalization.
Yeah, I think it's an encouraging sign. The two-year yield is most sensitive to Fed expectations, so that's been driven lower by some very aggressive dovish messaging coming out of the Fed. And on the 10-year yield, it's encouraging that it is not collapsing. If it really were collapsing, it would be signaling a lot of anxiety about the outlook for growth. Remember, we had a couple of scares on the data front several weeks ago with the July jobs report, but we've seen more resilient numbers since then. And so it's encouraging from a growth perspective that it's holding relatively steady as two-year yields move lower in response to the Fed. And the curve, like you said, is normalizing, reflective of kind of a healthy economy. And so I think to the extent that continues, it's certainly something to be encouraged about. If 10-year yields really were to collapse, then I think that suggests the market is becoming a lot more concerned about the backdrop for growth. And then that would be an issue for stocks.
Okay. James, I mean, you're still expecting the S&P 500 to reach 6,000 by the end of the year. What drives it? What do you invest in, assuming that move actually happens?
Yeah, the nice thing about the next 4 months, in our view, is that we're going to continue to see this broadening. So we think it's going to be driven, yes, by the AI tech trade, but finally, we're going to get this broadening out. And I think there's a new bull market in financials coming our way and a lot of these other sectors. So this will be the first time that we'll get that broad movement. And what it's driven by is, there's $5 trillion outside the market that should be in it. And we think that FOMO fuel is what we call it, is going to really drive equities. And I think investors, on any weakness, want to add to their portfolio's allocation if they're not already, at that right allocation yet. It could be that the Fed, has a policy misstep and that could cause, or maybe they don't go 50 like a lot of people think. I think they go 25. That might cause a bit of a pullback. That would be an invitation, we think, for investors up until that end of the year.